Hey everybody, this is John. Welcome to the free video. And let's take a look at a couple of case studies here of three recent trades, one that we're still in, two that we closed out today. And because these markets have been extremely volatile, and it's just the idea of like, all right, what kind of stuff do you look for here? Well, first of all, we're looking for trend continuation, and by definition, trend continuation is when the 8, 21, 34, 55, and 89 period moving averages are all stacked on top of each other with the highest one on top and the lowest on bottom. And in that case, when you see a squeeze, you can expect a continuation of the move. So what we did here is, so there's a couple things you could do here. You could short the stock, Biogen, if you have a fairly large account and you're comfortable with that. The second thing you'd do is buy a put. And if you guys are familiar with that, if you buy a put option, if it goes down, you can make money. And then there's a third option that's the safest option that a lot of people don't consider, but you could just sell an at-the-money call credit spread. And that typically gives you a 1-to-1 risk-to-reward ratio. And the nice thing is that if the stock falls, you make money. But if the stock trades sideways, you make money. Okay? And if for some reason the stock explodes higher, you only lose a little bit of money. So in the case of Biogen, we sold the 265, 270 call last week for $2.40. Okay, that's $240 per contract, and we did 10 contracts. And then today we bought them back at 40 cents. So we made an additional $225 on the trade today, but net made $2,100 on the trade without any stress in a very volatile market. Okay. All right, so that's an example to the downside. What about an example to the upside? Now, this one's a little different, and this one has what I call price divergence, so it's a little bit more of a nuance. So here we could see, yes, we're in a downtrend as defined here, okay? But then what we saw is two things. One is that there was unusual options activity up here, meaning that a lot of people, when you see what's called unusual options activity, it just means that a lot of people potentially in the know are making a bet that the stock's going to go higher. So that's what attracted our attention to this. And this was actually brought to our attention by Chris. From there, we just kind of start looking and say, all right, well, there's a gap to fill. And a lot of times when that happens, you'll see a gap that needs to be filled. And then from there, what you're looking for is on the smaller time frame, do the moving averages start to cross? And if they do, then typically you can get that rally. Well, and again, here it's a little bit trickier kind of a trade. So if you're buying the stock, you got a lot of volatility here, right? If you're buying calls, you know, you've got this kind of what I call a layup move, but then you want to get out. So what's the trade that you could do on this where you could just kind of hold on through the wiggles, so to speak, so you don't get shaken out? And now we go back to put credit spreads. In this case, kind of an at-the-money put credit spread, or slightly out of the money. This one, we sold it for $1.57, okay? And you can see right now, so the $86 put at the time was $2.12, and we bought the $81 put as protection in case this thing just imploded. And you can see what's happening. We're just getting some premium decay here. And right now the stock's at $87.25, which is above that put we sold, which is good. And we could buy this back tomorrow for 72 cents if we opened right around here, okay? So right now there's profits of $4,250 in this trade, and we didn't really have to do too much. If we could get to about 30 cents, I would definitely buy it back, and of course I'm gonna keep an eye on it. What I like about this is that we saw those price divergences, we saw that unusual options activity, and even in a down market, this thing is continuing to show strength. And we set up a position that was set up purposely to take advantage of for lack of a better term, I would say confusion and lack of conviction, okay? Right now in this market, there's no guarantee if anything's gonna go up for very long or down for very long, so we wanna set up trades in such a way as they can benefit from either, all right? So hopefully that makes sense. For tomorrow, what's gonna be interesting is that we do have a squeeze setting up here on the NASDAQ, and while the daily chart is pointing down, it's also very extended. And if the squeeze triggers long, we could actually have a pretty decent short covering rally back to 40.58. So we want to look at some safe ways to potentially play that. All right, so that's what we'll be doing. That's what we have in store for tomorrow. So for those of you that are looking to, first of all, get up to speed on the basics of options, okay, that's the first part of this. Henry and I are going to be holding a class this Saturday And at the same time, and this, just so you guys know, if you know nothing about options, that's what this class is designed for. So we want to take you, if you're a complete beginner or you're just still trying to get your footing together, how options work. I think one of the toughest things people, a lot of times people can understand, like, okay, if it's going to go up, I want to buy a call, right? Or if it's going to go down, I should buy a put. But they don't understand how options work, so they don't understand which calls and which puts to buy, okay? And then secondly, from there, understanding spreads is near impossible for beginners. So what we're going to be doing is, this is literally a foundational class. If you're brand new to options, that's what it's designed for. On Saturday, the strategy class is $297. We're going to take you through Options 101, everything you really need to know. Literally forget the rest. How to profit from maximum leverage with minimum risk, which stocks and ETFs to trade and which ones to avoid. We'll also be going through the most common pitfalls to avoid, the simple secret to using implied volatility to your advantage, and the fastest way to grow a small account with options. What I would encourage you to do, if there's something that sounds appealing, is then when this class, during the live trading, okay, so it's going to be a Saturday class and then 2 days of live trading. During the live trading, we're actually going to be doing live trades, showing you just essentially our favorite setups. And if you have taken classes with us before, the live trading, it'll be simple, but it will be, look, in this kind of market, these are the types of setups that we like. It doesn't really matter what kind of market you have, as long as you understand these principles, these option principles and strategies, then you can sit there and kind of pluck money out of the markets, and that's what we're going to be focusing on, okay? So simpleroptions.com/foundation. See you there on Saturday. And of course, I would encourage you to do the live trading, which is by far the most popular, and this includes that class. All right, hope it helps. You guys have a great night, and we'll see you at the next update.